Welcome to the Money Watch Show. It's Tuesday, October 1st, and we are here trying to take the mystery out of your financial life. The we is me. I am your co-host, Jill Schlesinger, CBS News business analyst, certified financial planner, and my partner in crime, Mark Talercio, also a certified financial planner. Hello, Mark.
Hello, Jill. So how do you feel the fact that I can say Thanksgiving is next month?
I feel terrible about that.
Are you ready?
I mean, no. Although I did, Mark makes fun of me because I'm one of the few people who still gets a physical newspaper. I did cut out a little healthy sales outlook for the holiday season. So what I can tell you is that whether you like it or not, it's around the corner. And, of course, the crazy thing about holiday sales is that essentially it's the last 2 months of the year every year. It's November 1st through December 31st. And it's just, there's so much going on right now. There's so much going on with the economy. There's an election, I heard. It's hard to really concentrate on anything but just numbers for me. I can't go into like, oh my God, did the year go fast or not? It's too much. And so, and we always do a lot of our recording in advance. Are we taking the holidays off, Mark? What are we doing?
I think we'll just do, the week around Christmas. Is it the week between Christmas and New Year's we usually do?
Yeah, I think so. That last week, maybe it's like a week and a half, Mark. So it's like the week of the 23rd that starts Monday the 23rd, and we'll do it until maybe we'll do the last 2 weeks so that we don't have to worry about that.
I'm pulling up my calendar. I'm looking
right now because I see that Miss Jacqueline has blocked out in my calendar out of office for holidays starting on the 23rd and resuming back in the office on Thursday the 2nd. But you don't want to do that. You want to just, come on.
You don't want to forget Thursday the 2nd, just start again on Monday the 6th?
Yeah, exactly. We're going to do 2 weeks. Come on, right? I mean, who's kidding who? That's what's going to happen, right?
Yeah, who's let me, as you say that, the 2nd is on a Thursday. Who's coming in for Thursday and Friday? Everyone's taking those weeks off.
I'll tell you who's coming in. Those people who work at Amazon who have to show up 5 days a week now.
Yeah, there is that.
I don't know. I think that the problem is that we should just have a national 2-week holiday, and nobody wants to admit it, but because those are dead weeks. They really are. Unfortunately, if I'm in the news business, so I don't get dead weeks. Oh, by the way, big announcement for you, Mark. It is now this week is the beginning of the third hour of CBS Mornings. For the first time ever, we're having a third hour of the show, and it started yesterday, and I am assigned Thursdays. So every Thursday at 9:20 a.m., I'm going to be given a little segment. Oh, it's kind of fun. They're doing a little graphic for me. It's fun.
Very nice. It's been 8 years since I've watched any hour of that show.
What are you talking about? You only watch my segments, right?
Yeah, no, I haven't watched the show in 8 years. Since I left CBS 8 years ago, I haven't watched.
All right. That's not nice to say because that's...
Yeah, wow, that's the truth. What do you want me to tell you? Priorities.
I think you should elide the truth, just sort of skip over it. Thank you very much. All right. Listen, if you've got a financial question, give us a holler. Go to JillOnMoney.com, click the contact us button and write us a note. And if you want to join us live, check that box. Don't forget to sign up for the free weekly newsletter. Free every Friday. It comes out. Mark, you do such a great job with that. How do you keep track of all of that? Do you just kind of put a file together? Oh, that's good. That's good. How do you know what to there's so much coming at you.
I have a folder and, I see things throughout the week and I'll just bookmark things and then I'll go back on Fridays and see what makes the cut.
I do that a lot just to think about writing about things, so I have something in mind that I could maybe use later. But then I have this massive file that I have to just go through all the time. But anyway, go sign up for the free weekly newsletter. Don't forget to sign up for the service called Jill on Money Live, because for $35 for an entire year, you have access to quarterly live webinars. You get the back catalog of those webinars. You get bonus video content. You got a lot of stuff there. All right, gang, let's get to our listener, Bob, who's been patiently waiting on the line here. Hello, Bob. Where are we talking to you from, Bob?
Hello, from Virginia Beach.
What's going on? How can we help you out?
So my situation is a little different. I haven't heard it talked about before, and it deals with how to value ESOP, so employee stock ownership program. And then, when I look at this objectively, I've been investing for 20 plus years, and, there's some emotions there of things that I've done that I continue to do. and then I try to look at it, with a different set of eyes. And I look at, I have I'm mostly total market S&P 500, but I do have one stock that I just can't let go of because it's got some emotional ties to it.
Is it called
And
NVIDIA?
it's actually Tesla.
Okay.
Do
you own a Tesla?
I do. I'm in it right now.
You're talking to two non-car people, me and Mark. So we're just going to own that right there. So Bob, we're going to talk about your total stock market index, your ESOP, and your Tesla stock. But first, we want to find out, how old are you?
I am 48, and my wife is 44.
Okay. Do you have kids?
We have a 2-year-old and we have a newborn.
Oh, and yet you have time for us. Okay. Are you guys both working, or are you taking time out to actually raise this child, or what's going on?
Yeah, we are both working. My wife is currently taking a couple months off, but she goes back to work. She has her own, she's self-employed.
Oh.
Yeah, but I am back to work.
And how much do you earn?
Total household is about 220,000 for all of us, but there's an asterisk there because we get considerable compensation through the ESOP.
So the 220, is that inclusive of the ESOP or not?
No.
Okay.
No.
So it's 220 you live on, right? And then the employee stock ownership plan, is this so tell us a little bit about where you work. Is it a closely held company? And how long have you been there? What's going on?
Yeah, it's a company that's been around about 15 years. I was there from the beginning. It's 100% employee owned. I guess it's common in the tech world for an ESOP.
Yep.
But they give every year 10% of your salary goes into the ESOP, and then it's evaluated every year based on how valuable the company is, because it's privately held. You get that added to your ESOP. So
okay. Now, what's the value of your holding in the ESOP?
The value that I currently have is 487,000. So if I left the company, they would have to pay me out, and then I could take that and roll that into a rollover IRA.
Okay. So interestingly, it has real value. If you were to leave sometimes when you leave, they'll say you leave your ESOP on the table, but that's not the case here, right? You get it. So we have a valuation. You've been there from the beginning. So, you even came on the program and you sort of said, look, I might be emotional about this, but
yes.
If you had to put your rational brain in service for us, how's the company doing?
Great. I'm very confident on it. It started out, it kind of grew over time. Started out, 10%, 20%, 30%, but last year was 50%. And next year, I feel confident about next year being 50%. And, obviously it's not going to continue forever, but on those, but
although that would be nice. Do they have plans to sell, go public? Is there no. So there's no intention of that. Okay.
Absolutely
gotcha.
not.
So there's no cash out event eventually.
No.
Okay. So if you just were to stay there for your career, if you stayed there for 20 more years, what happens at retirement to the ESOP?
So if you leave the company, that you have to get paid out.
I see. Okay.
You cannot hold on to it.
And if they fire you for cause, same thing?
Same thing, but
okay.
I'm not going to get fired.
I know. I love that about you. You're like, I'm not going to get fired. Okay. So you said you've got so let's say about $500,000 in the ESOP. Then what about in retirement funds? What else do you have?
Quite a bit. So 401k, 775,000, a rollover IRA, 1.1 million, but a gigantic portion of that is Tesla.
Why do you have so much in the rollover? Did you work somewhere else? What's going on?
I did. I've had a long career, and it just so happened to be that my Tesla was inside there. And it ballooned.
I see. I gotcha.
Yeah.
I gotcha. Okay. So, but that's kind of cool because most people would not sell it, not just because of the emotions, but because of the tax implication. But that's not you.
Yeah.
So 775 in your 401k, is that pre-tax or is it Roth?
So 151,000 of that is Roth 401k.
Okay. And what are you using going forward?
Yeah, so I'd say a couple years ago we switched over to just contributing Roth 401k, 100%
Gotcha.
Roth 401k.
Okay.
Yeah.
And your wife is self-employed. Does she have a retirement plan as well for herself?
She does. She has a solo 401k, which was with Vanguard, and then when Vanguard said they don't want to be in the solo 401k, we switched everything. We switched everything to Vanguard, not just the solo 401k, but we switched everything. Everything to Fidelity.
Okay, so lucky for Fidelity, they're happy to have your money. How much is in her solo 401k now?
So her solo 401k is 91,000.
What else is out there that you guys have as investments?
So my wife does have a rollover IRA of 210,000, and then we have some small Roths, just 8,600 and 12,000 out there, and then a little bit for 529. So it ends up being 2.7 for all that, and then we have a little bit of home equity.
What's your house worth?
House is worth easily 600,000.
And what is the mortgage?
415,000 with a 2.25% 30-year fixed rate mortgage.
Good Lord. Good Lord. I just was looking up mortgage rates just for fun this morning. And it was funny because, there is that weird period where, essentially from like, I don't know, let's call it 2021, pretty much right till 22, where you could get these ultra low mortgage interest rates, right? But I went back and I was like, when was the last time we saw 5% mortgage? It wasn't that long ago. It was only 2018. This seems like 100 years ago. It's really crazy.
Yeah.
So, okay. So great on that. So you're not going to move. You like that.
No, definitely not.
So any other real estate or any other assets we should know about?
Absolutely not. I was a landlord for 10 years and I will never do it again. Never, ever, ever.
I guess you had the wrong tenant.
I know, right? Or you had many of the wrong or it's just a pain in the neck, isn't it? That's really what it is.
It is not passive income.
Thank you for saying that, because sometimes we're like, sounds like a great idea to be a landlord, but in reality, it's never quite as easy as people make it out to be. So Bob, when you look forward and you say 2.7 million, are you including the ESOP or not in that?
That is including the ESOP, correct.
Because I would include that when you say like a lot of people don't have that. The thing it's not like, oh, I have stock options that are out of the money, or I have stock options in a company that's not public. You have a position in a company that has value. Now, Mark, do you agree that we can kind of keep that ESOP on the balance sheet? It's a retirement asset, no?
It's hit. Yeah, absolutely. It's not going anywhere.
It doesn't seem to be going anywhere. It sounds like this company is not like some little baby startup where you're like, oh, my ESOP is valued at some silly number that you can't even justify. It sounds like you can justify it. So I think you keep it on the balance sheet and you think of it as a retirement asset. I would not do anything when looking forward. I wouldn't necessarily say, oh, I expect that to be going up by 10% a year or 20% or any. I would just say it's just an asset. That's what I would do. In the same way that you would say like, hey, my Tesla grew by 1 bazillion % for a period of time. I don't think that it's going to grow by that same percentage going forward. But I do want to talk a little bit about the idea around the 529 accounts maybe, and what else you can do to kind of put yourselves in a position to, be a little bit more in balance. So what do you see as the priorities? Do you want to retire early? Do you feel like you're going to work forever? Do you want to put money away for the kids' college? What are your priorities?
No, we both really do enjoy our jobs, so there's no rush to retire early. Definitely not planning to retire early. Mm-hmm. And also, we do want to have enough for kids' college, to be able to give it to them. But at the same time, we're not looking to, build generational wealth or something and, give them $1 million or something crazy when we retire. So
okay, that really makes sense. Right now, when you gave me that whole rundown on retirement assets, do you guys also have a brokerage account or a savings account or something?
Yeah, so that's the only thing, and that's kind of where I think that maybe it makes sense to kind of build up. Because, when we went into newborn mode, we kind of just funneled cash. So, we beefed up, and it's really just in a high yield savings account. But really, we don't have a brokerage account right now.
How much in the high yield savings?
55. And,
Okay.
We were keeping about half that, just because our jobs are so stable. Even through COVID, we never lost a beat.
Okay, great. And how much do you think you need to live on in a given year? I mean, not newborn year, but like, a given year.
So I knew you were going to ask this. So I would say comfortably 11K a month.
And I imagine neither of you will have a pension, right?
No.
Okay, got it. So if you're looking ahead, I mean, how do you I'm not talking about generational wealth. I'm talking about, would you like to make college funding a priority for you?
We want to definitely make sure that we can afford wherever our kids go to college. We don't expect them to go to an Ivy League school, but we want to be able to cash flow their college and not.
Okay, that's interesting. Mark, do you have more questions for our friend Bob?
I don't. He mentioned, I mean, you have 529s. I'm assuming that's very, very minimal in there right now.
13,000
each, or total?
No, we just opened the newborn. Just got a Social Security number.
How's the cash flow right now? Like, I know your wife's going back to work, so pretend she's back at work. Household income of 220. How does the cash flow look for you guys?
It's pretty decent. Obviously, when she goes back, it'll be better. And we do have a second. The newborn's going to be going back to daycare. So it'd be about 3,000 a month for just daycare. I'd say, I don't know, a couple thousand.
You say you have like an extra $2 or $3 grand a month. The kid goes into daycare. The baby goes into daycare, right?
Yeah.
Your wife goes back to work. Net, you think you'll still have a couple $1,000s a month to do something with?
Whether easily.
Okay.
Yeah,
okay.
Yeah, I'm very conservative with the numbers because I'm just paranoid about running out of money. But yeah.
I love that about you. Is that because someone in your life once ran out of money?
No, I'm just the numbers nerd. I don't know.
Okay. All right. That's fair. So I think it would be good to get that money working for you, especially now that you have that high yield savings built up. I'm a fan of the 529 accounts. I just am. I think that it's, it is such an efficient way to save for college. And, you got a long way to go before college. And even if you just said, you know what? Whatever is my free cash flow, maybe you wait till you see when your wife goes back to work to really get the numbers. But maybe whatever it is, I would say half the money should go into a 529 and half should go in a brokerage account. Mark, do you agree with that?
Yeah, for sure. I mean, the time is on their side. Like, now's the time to get cranking on the 529s.
Because, that 529, I can't help but see the advantage that a 529 has over a brokerage account in just the tax savings, right? You put the same dollar to work in each of these accounts, and the 529 is basically tax free as long as a kid goes to college somewhere.
Yeah.
Okay. So I love that. So I would say whatever your free cash flow is, put it to work. Now, what can we do to talk you through the Tesla position? Because you said, you've got a bunch of Tesla stock. It's in that IRA rollover. What percentage is in Tesla stock?
I did it of the overall net worth, and it's almost 16%. So it's 15.8% of overall net worth.
I mean, that's not terrible, honestly, but it's in a retirement account. So what is it that we can do to encourage you to just like blow out of this position? And you can keep some Tesla stock. It's not that big a deal, right? Like, if you look at all of your investments and you're at 16%, what I would at least start to do would be, hey, just take some money off the table. You've made a ton of money. You don't have to wait for it to go back to the top, but to take some of that money and reallocate it into areas where you don't have any exposure.
Does it change your answer if I tell you that I already took it off the table? So when I bought it,
no, because you keep doing it. That's the beauty. Can I just tell you something? When you look at CEOs of these publicly traded companies and they say, oh, well, David Solomon from Goldman Sachs, he sells a certain slug of Goldman Sachs stock. They have to register it. He says, I sell it. And we know what he says? He says, oh, the reason I'm selling it is for asset allocation purposes. They're rebalancing because they don't want too much of they're not saying, oh, bet against my company. They're saying, I'm just doing it because I have so much money in this stock. I cannot, that's just does not make sense. I think it's great. I think it's a great practice for you to basically say, I should just not really have more than 10% of my invested net worth in one company. Now, you might say, get off this call and say, that might make sense. I still don't want to do it. Okay, fine. I'm just saying that if you're very disciplined, even if you just do this once a year and say, once a year, I'm just going to make sure I don't have more than 10% in this company. It's a very good practice. It is essentially what managers do to maintain the right strategy going forward, that you don't roll the dice so much. And look, you've made a ton of money. You've said that. It's great. It's amazing, right? You're in the money. You've done everything right. Why shouldn't you be willing to take the money and reallocate it, be a little bit less emotional about some part of your portfolio and move on?
That makes sense.
I know it's so hard. Mark, will he do it? Will Bob do it?
Is he going to do it?
I don't know, Bob. What do you think?
I don't have that mentality. It's like, why own something if you're never going to part with it and take advantage of it?
Everything is for sale. I literally said to my wife recently, someone was like, we were talking about real estate in our neighborhood. And I'm like, if they offer the wrong price, I'm done. And she's like, what? Really? I'm like, yeah, wrong price. I'm out. I couldn't care less. Give me the wrong price for something. I'm very happy to do it. Not to say that like I want to do it, but like if someone came in and offered me, I don't get so, I'm not like romantic about a thing. About people, yes. Like I love you, Mark. I love you so much. A thing, a stock, a house, it's a thing. That's it. No one cares about your Tesla stock. You know what's going to be nice is that when you have some of that flexibility and you give yourself permission to sell and you just say, I'm building my net worth. This is what smart people do. They build their net worth. They don't it is by accident that you had this position. Because if you had, if we go back, when did you first buy Tesla?
I bought it on my birthday in January 2017.
Okay. So you look back and you're like, I took a flyer, right? And you knew you really were into the car, you're really into the company, but it could have gone to zero, right? And it wouldn't have hurt you. So look at where you've come. Now, what's the total value of this position? You're talking about significant asset, a significant portion of your total assets. And I just think you're entitled to take some of the money off the table and enjoy it. It's great. It's fantastic. Listen, I'm starting with 10% for you because I think there's no way you would go to 5%. But,
no.
I say, you see that, Mark? See how I read him? 10%. That's plenty. It's plenty. It's good. And you love your car, right?
What was the initial investment in Tesla? How much?
40,000.
That was a big number for you, I bet, in 2017, right? That was a big chunk of your money, right?
Yeah, and at the time I was thinking if it went to zero, I'd be fine. It wouldn't change my world.
Right.
Well, guess what? It went to over $400,000. That's changeable.
That's changeable, and you know what? I want that money. So that's what we have to say. And I know that you said the rest of the money is mostly in a total stock market index, but you can expand your horizons. You're not 28, you're 48. And you could have a bond position. You could have an international stock position. It would not kill you. But I don't know if I'm going to convince you to do that. So all I can tell you is it is time for you to pull back on that position. And I think you know that you should do that, which is why you've contacted us. And if you just start small, and it's great to take some of the money off the table, just do it. It's not that hard to do. Once you do it, you'll still have the position. I hope that you look back and say, oh, those idiots. Had I kept this, I would have had 800,000. I really do. I hope that's the case. But it is still, it's like to say, what is the most prudent thing to do? Can I ask you some more boring questions?
Sure.
Tell me about life insurance. What do you got?
So that was actually one of my. So we only have. I have 450,000 in life insurance on me, and 200 of that is from my employer, and then term life insurance, and then my wife has 500,000 term life insurance.
Mark, do you think that's enough? I mean, they have a lot of assets.
They do have a lot of assets. They, very young kids too.
Yeah, that is true. You're healthy. You both healthy?
Very healthy.
Can you buy more life insurance through work?
Not through work. Work just gives it to me. I
mean, you could, if you wanted to, go out and just look at what would a 10-year term life insurance policy be?
Okay.
And see what you come up with. It's probably not big money. It really is not. So, and then estate documents.
Estate documents we're good on. We updated those with the newborn. We're still trying to figure out how to fund our trust, but other than that.
Yeah, I mean, like trust. What are you funding a trust with? I mean, you got most of your money is in retirement assets.
The mortgage, specifically the mortgage. It's been a paperwork nightmare figuring out.
Oh, you want to put your house in a trust?
Well, that's what they said to do. And
really?
then when I tried,
I don't know if I would do that.
Okay.
It is a complete pain in the ass.
Okay. Yeah, it is. It is. And the local city doesn't know how to do it.
Yeah, I know.
Talk to the right person.
I know it. I don't know if I would do that.
Okay.
I am not at all like, I just feel like that's one of those things where it's like, okay, ideally, yeah, but that's kind of how I am. I wouldn't do it.
Okay. Well, that makes me feel a little bit better.
Good. I want to make you feel better.
You could set up a revocable trust for, the kids. God forbid if you were to walk outside and get run over by a Tesla right now. You can get that squared away, but you don't need to put the house in a trust.
I just think that that's like a lot of work for not a huge payoff. But that's me. So no, I don't think so. If you want to talk through your big fat Tesla position, give us a holler. Go to JillOnMoney.com. Click the contact us button. Let us know if you'd be willing to come on the air live with us. We would really love that. Okay, what else can I tell you? Check out our YouTube show. It's called Jill on Money, powered by The Compound. It's so much fun. Mark Talercio is the co-host, executive producer, and king of all things web. We are distributed by Paramount Global. We drop our episodes on Tuesdays and Thursdays. Please leave us a rating and review wherever you listen and do something nice for someone else today. Change your work, change your wealth, change your life. Thank you for listening, and we'll talk to you on Thursday.
Paramount Podcasts.